Hello and good morning. I'm Ethan Feller from Zacks Investment Research. Hope you all had a good holiday weekend. This is Momentum Mondays, where we go over the market happenings over the last few weeks. Then we're going to take a look at the economic calendar to see what we have going on this week. And then I'm going to share 3 top-ranked stocks with technical trade setups. So here we have the S&P 500 index, and we can see over the last month, markets have absolutely rocketed off of their lows after building out this downtrending wedge. The S&P 500 has broken out and really it's pretty much just been grinding higher for the last couple of weeks, but it really doesn't want to go down. You can take a look at the NASDAQ as well, and you can see the same thing here. We got this nice descending bull flag, breakout, gap higher, and it's just really slowly moving higher. And you can see the NASDAQ made a new yearly high, although the S&P did not yet. So, ever since we started Momentum Mondays, I've remained bullish. I've been saying we have a year-end rally in this market, and you can see that's been happening. I do think there's more upside this into the end of the year, the last month, but I would very much welcome some sideways or a little corrective action, just to set up, build out another little bull flag here and then break out again. But you can't fight the tape, and it continues to grind higher. But again, I would really welcome, a couple days down or even just some sideways consolidation, just to correct these really bullish moves of the last few weeks. Major development that we can see is that the interest rates have eased considerably over the last few weeks as well, which has been a major boon for the stock market. After peaking at 5% in mid to late October, rates have moved quite a bit lower, from down to 4.4 to between 4.4 and 4.5%, which is a very welcome development for stocks. Things are just continuing along nicely for the economy. It remains robust, and employment remains strong. We'll take a look at it as jobless claims right after this. And yeah, things are just moving along nicely. I think the Santa Claus rally is a lock, and we're going to continue higher. So let's take a look at the economic calendar. So first half of the week is on the lighter side. This morning, we're going to have new home sales. Then on Tuesday, we got the Case-Shiller Home Price Index, consumer confidence. There's a bunch of Fed speak as well in the afternoon on Tuesday. And then Wednesday, we'll get a GDP revision, which should be fairly significant. You can see the expectation is to be the same as the original print at 4.9%, a really, really strong GDP print, a lot of economic growth. And then Thursday and Friday, we get very, very important data. As we've been following, we've got initial jobless claims. Last week, initial jobless claims came in really light. It came in below expectations. We have been monitoring. We had about 4 or 5 weeks in a row where we saw initial jobless claims rising, and it got above 250,000 at one point. But last week got lower, and the labor market is just incredibly robust. And I've been saying it's probably the first place I want to see an economic slowdown would be in labor. It would be just the first tell that, okay, maybe we've got some slowing ahead, but it just remains strong, and you can't fight a strong market like this. And so the big data, we got inflation in the form of PCE and core PCE price index. This is the Fed's preferred measure of inflation. And when they say we want inflation down to 2%, this is the number they're talking about. And it's the year-over-year number that they're going to be looking at. So we can see last month, PCE year-over-year was 3.4%, and the core was 3.7%. We don't have the estimates for regular PCE, but core PCE, which is really the most important number. Core strips out the most volatile parts of the index, which are food and energy. So you get a less noisy print. And we can see the expectations are for 3.5%. So continued disinflation, falling inflation, and it's just a question. We got a few more months to see if this plays out. We're going to get a soft landing or we're going to get a no landing. Could the economy just stay really strong, inflation ease, and, employment remain strong, and, it could be setting up another big year next year. So we'll see. We got critical data on Thursday morning, watch initial jobs claims and PCE inflation. And then Friday, we have ISM manufacturing, and then we got a Fed speech. We got Jerome Powell speaking. Jerome Powell and Fed Governor Lisa Cook talked to local leaders in Atlanta. And so you never know what could be said with these Fed speech, and they're not in the blackout period, so it could be a market moving event. So Friday at 11 and Friday at 2 p.m. these are events to be watching. And so inflation, that's a really big data point this week. PCE, Fed's favorite measure of inflation, so we're going to watch that one. And now let's get into the trading setups. So I said 3 trading setups, but I actually have 4. 3 of them are Zacks ranked 1s, and one of them is a Zacks ranked 2. Our first one is Duolingo. It's a popular consumer language learning and educational software. We can see it's got a top Zacks rank. It's in top 31% on the Zacks industry rank. And it's a fast-growing company. We could take a look at the sales and earnings expectations. You can see the sales this year are expected to grow 42%. Next year, almost 30%. It's really, really strong growth trends. And it's got a nice trading setup as well. So we can see this nice bull flag building right here, and it started to break out on Friday. So, you see a continuation this morning on Monday. So long as it's not back below this 218.50 level, I think it should continue higher. And the Duolingo setup is actually very nice on the longer scale. You can see it's moving higher. It's been moving higher all year. More than tripled this year. But it's got this big consolidation here, gap up on earnings, and this is just a really bullish setup. Looks very good to me. So keep your eye on Duolingo. The next one we got is Pinterest, another technology. This is a social media website. People share images and themes and stuff like that. It's another, really fast growing stock. Zacks rank 1, upward trending earnings revisions. It's top 13% of the Zacks industry rank. Software is definitely getting some love from the analysts. And you can see earnings per share growth forecasts are really strong, almost 36% over the next 3 to 5 years. And you can see it's with crazy growth like that, it's got a fairly reasonable earnings multiple, forward earnings multiple at 30 times, and its PEG ratio is below 1. And that's what you like to see. It's a great opportunity to buy an internet stock at a discount, and the trading setup is very nice as well. So wasn't this one actually? This was the one I wanted to look at, the longer term setup. You can see Pinterest is way off its highs. It really got jacked up during the late, post-COVID mania, and it's been building out this really big base over the last almost 2 years. We can see it made 2-year highs in July, and then it sold off again, but then on strong earnings, it gapped higher, and now it retook those highs. So this is a great setup. We got Pinterest. This is just a fast-growing internet company, capital light, and it's got this really nice technical trading setup. So if we can see Pinterest move above $32 this week, I think you get a really nice breakout and a year-end rally, which this is a really good setup. And, so long as it doesn't trade below, say, $31, it should be good. But if it does trade below 31, you might want to watch out. And again, while I said I think that, I would really welcome some corrective action in the indexes and the market broadly, some of these leading stocks, even if the market sells off, they're going to rally anyway. So, you just got to trade the price and take what the market gives you. And however, maybe the market rolls over and, these trade lower. You just want to follow these levels, follow the price action. If it breaks out and reverses, you got to watch out. If it breaks down, you never took the trade. So yeah, keep an eye on Pinterest. This is a really good one. I really like this setup into the year end. Next one we got is Verve. This is a stock we've looked at a number of times. It's a internet infrastructure company. They work with data centers. Another fast-growing company with a reasonable earnings multiple. Just take a look at the sales growth. Sales are expected to grow 20% this year. Earnings have really strong growth estimates. We'll see this year, end of year, earnings are expected to grow 225% year over year. In current quarter, earnings are expected to grow 82% year over year. So, Verve, this is just a really great company, really great setup. And it's got a great technical trading setup as well. Verve, it just keeps consolidating and breaking out, consolidating and breaking out, consolidating, breaking out. And then you got, we sort of broke out of this larger consolidation as well from here. And it's all quite encouraging. And now we got this smaller consolidation here. And you got a really nice risk reward setup here. If Verve can trade above 44.15 this week, I think you can get another bull run in this stock. Alternatively, below 42, you might want to watch out and wait for another setup. But Verve, VRT, keep an eye on this one. And the last one, I just want, we looked at a lot of, these are like mid cap technology stocks. These ones are money right now. These are faster growing companies, and it seems the market is rotating a little bit from these large and mega cap technology stocks, and these mid cap stocks are really getting some love. And it's been a tough time for them. As interest rates have risen so much, their earning multiples have really gotten killed. Especially last year was terrible. Some of these stocks were down 70, 80, 90%. So they're on sale from their old prices, and they're starting to build some momentum. So this could be a sector you want to keep your eye on. You learn a little bit about it into the year end, and maybe next year could be a massive year. If we see interest rates really fall, the economy remains strong, these mid cap stocks could be real winners. So it's good to start learning about these ones. Duolingo, Verve, Pinterest. And then the last one we're going to look at is Amazon. Everyone knows Amazon. E-commerce, cloud computing, beast, and a great company. We got, it's a Zacks rank 2. Like internet commerce, it's top 17% of the Zacks industry rank. It's got great earnings growth forecasts, 29% annually over the next 3 to 5 years. It's got a high earnings multiple, but Amazon has always had a high earnings multiple. And everyone knows Amazon. It's a great stock. And it's got a promising technical trade setup as well. We could see we had this downward wedge that Amazon broke out. This is something we noted on Momentum Mondays a few weeks ago. Broke out cleanly from there, and it's building out a nice bull flag here. This is another really good setup into the year end if you want to take, the growth stocks are going to be a little bit more volatility. It's going to be a little crazier trading action, but Amazon's probably going to be a little more steady in the mega caps, and obviously more liquidity if you're trying to get in. But this is definitely a setup worth watching. If Amazon can trade above 147.20 this week, I think you get another bull run, this year-end run. I really think these bull flags are setting up for a great couple of weeks. And it's also possible if the market does decide to trade sideways this week, you just see these bull flags build out a little bit farther. So maybe they test the bottom of this range before breaking out once. Maybe they even flush below the range and come back up. So these are stocks. Okay, we can see the market just opened. Amazon has gapped higher and broken out. So keep an eye on Amazon. Good looking stock, good looking trade setup. That's it for today, folks. Hope you found this information valuable and entertaining. If you like this content, definitely like the video and subscribe to Zacks' channel. And if you want more from Zacks, sign up in the link below or go to zacks.com/promo. Thanks.